Today we're going to be talking mining stocks with Tommy Humphries, founder of CEO.ca. Tommy, thanks for joining me.
Hi Alex, how's it going?
All right, before we get going, why don't you tell me a little bit about CEO.ca?
CEO.ca is my blog where I interview doers and achievers in finance with a slant towards natural resources.
All right, so what have you learned from investing in junior stocks?
The first thing is you have to understand if you're jumping on momentum or whether you're a value guy. And the momentum guys typically employ technical analysis, which is basically trend hopping, and you want to buy what's being bought. When you start to see some accumulation in the charts, that's some indication that that a stock is hot. It's very easy to understand technical analysis on a simple level, and we talk about it a lot on our site. But like I said, the value guys, you want to be looking at things like earnings and priced earnings and the underlying commodity price and take a much longer view. But the juniors are obviously a much different beast than the mid caps and the larger mining stocks, because obviously they're not for the faint of heart. But I guess second to real estate, they're probably the best source of wealth creation in Canada, which is obviously a extremely wealthy country, and it's a fantastic way to make money. The junior stocks, but obviously extremely risky.
So when you're looking to invest in either a big cap or small cap company, what are the things you look for? Is it more production, exploration, financing? What are the telltale signs for you as an investor?
I like to sort of play all kinds of different strategies. One is just jumping on discovery. You've obviously seen in the last month a fantastic discovery in northern British Columbia. I won't say the name just because we're not talking specifics, but if you usually see in these discovery stories, it was the same for that other wonderful discovery in Saskatchewan last fall and others in Mexico that I can recall. You see this quick jump, and then it seems to do this little spin, and then it goes higher. And it's usually a week-long period where the market is learning of a discovery. And in that time, you can be a trader, and you can be late. You can be on the second or the third day and still make amazing money. You still double or triple your money. But in that sense, you want to trade out of that name quickly, unless you really have done your research, have evaluated the project, and understand that you're signing on to be a part of that de-risking process as that asset continues. The other thing, obviously, is people, and that's what everybody says. But do the stakeholders in the company have a track record of value creation? It's quite straightforward. And the other thing that is maybe overlooked is just the focus factor dilution. How many boards and how many companies is this team running? I think of Dave Lowell, who is an old exploration legend who's actually still active at 83 or 4, and you guys shared my interview with him back in January. But he is 84, and he has been involved with 2 public companies in his life, and there's a third, I believe, coming. But guys like that who have a track record of value creation, who don't dilute themselves in 40 or 50 names or even 5 or 6 names, are the guys that you probably want to be with. I mean, even the really good management teams who've had a score, but they have a stable of 8 or 9 deals. When the market is going down, as it has, it's all we've seen for the last 2 years, there's nothing they can do to add value to keep all of those companies afloat, and so they end up getting taken out with the rest of us. So people and focus factor is pretty critical.
All right, Tommy, I'm going to throw you a bit of a hypothetical situation here. There's a major that will remain unnamed that is floating around in a price range where we wouldn't regularly expect majors to be. So what do you think would be more wise? Would it be to invest in a major that is priced so low, or would it be better to look at intermediate stocks and junior stocks?
Well, I think the juniors is where you have to be aware of the old fox and know that there are usually holders of those stocks that want to get out and will smack your bid, and it can be very difficult in a down market to for a lot of these juniors to survive. So my thinking is for a safer play, the distressed major probably is the better bet. But the reason why it's distressed is because the market doesn't really have a lot of confidence in that name in the moment. So that's obviously telling you something. But if you believe in the gold price, and if that's your thesis for owning a gold stock, well, the distressed names, some of them may have some challenge with a lower gold price and staying afloat and staying in business. But I think the market has priced that in a lot of these names. And obviously the major companies are forced to get a lot smarter and are cutting costs. And, an investor who wants to speculate can either buy a junior name right now that's distressed, but that junior name may have financing issues and they may not be around in a few years. The same with the major. But, if you really want to get gutsy, you could buy the major, but you can buy call options in the major, and you can buy massive leverage exposure to a major, which could give you much more dramatic upside than owning any junior, frankly, if a major was to double. But like last year, 12 months ago, as I was saying to you, these majors look cheap, and they look cheap now. And so if you're buying it now, I guess you need to expect that that it could be cheap next year and cheaper, and you got to obviously be prepared to average down and hold it for a while. But the major is the safer bet, I would say.
All right, Tommy, some excellent insight. Thank you very much for joining me today.
Thanks for having me, Alex. Keep up the good work.
And thank you for watching. If you have any comments or questions, please don't hesitate to send them to newsfeedback@kitco.com. You can also follow the conversation on Twitter @Alex_Letourneau. Cheers.